The next thing is again very, very important is your ledger master setup. Again, these are one-time setup that you need to do. Especially the party master configuration is very, very important, very critical for Tally to automatically do your GST calculation and validation, right? So if you see the party master, yes, I mean, like, one is that if you can specify the address, everything here, pin code is required in case of your e-way bill. If you are generating e-way bill from Tally, then this field is very important. The most important thing, let's assume that you are not using e-way bill, you want the GST, the main GST to be configured. So important thing is that it is very important you select the country and the state. Now this is what the intelligence which I had mentioned to you, that when you create your when you created your company, you said the state is Karnataka. Now this is a customer that I'm creating, I'm saying the state is Karnataka. Now because you are in Karnataka and your customer is in Karnataka, when you are going to make your tax invoice for your outward supply, Tally knows that the tax that needs to be levied is CGST and SGST. So it will automatically, it will only calculate when you select the CGST and SGST ledger. Okay, so this is one thing, right? Now country, if you say that it is other than India, and if you are making a tax invoice, it Tally will know that it is an export, so it is going to automatically show you in your export column. If you are making an purchase entry, then it is going to show you that it is your import, right? So it is also going to show you that it is your import. Then based on your stock item, it will say that it is import of goods. Based on your ledger, it will also consider that it is import of service. Okay, so all this intelligence is built inside. That is why the first very important aspect that you have to remember for proper GST compliance in Tally, the master configuration plays a very crucial role. And for you to understand the master configuration, the hierarchy and inheritance which we saw in the previous slide is very, very critical. Okay, so now you select the country and the state. Okay, and the next thing that you're going to select, so this is going to help you identify whether it is an interstate or an intrastate transaction. It will also identify your import and export also. Then the registration type. So based on the registration type that you are selecting, Tally gives you multiple registration type. For example, let us say, okay, now I will just close this company. I just wanted to show how automatically Tally is going to give you this. I have the same company uh, here, which is with proper GST entry and configuration. So I come to my accounts information, ledger alter. I'm going to select one particular, so this is my salary credit, doesn't matter, right? So when you come here, it is now going to basically give you this multiple registration type: composite, consumer, regular, unregistered. Depending on the type of registration type that you are going to select here, Tally is going to again put this information in the relevant box, right? So based on the type, and also like for example, a regular dealer has also got GST, composite dealer has also got GST, right? But then in your GSTR1, you have to capture them in a separate table. I mean, in the same table, different area, right? So how do you do that? So that is why the registration type plays a very important role. If you say composition, then it will ask for GST number, right? And if you say regular, it will ask for GST. If you don't enter GST for composite type of dealer and for regular type of dealer, that is a mismatch, or it is an incomplete entry, which Tally is going to catch you in your, before you file your return, it is going to show you those errors. Okay, one of the error is that if you don't capture, if you have captured wrong GST also, it is going to tell you. It might, Tally will not tell you whether this GST actually belongs to this person. That linking is not done, but then the genuinity of the number that is entered is what validated by Tally. Okay, so this is very important for you to know, so that Tally will automatically put this transaction. Once you make an invoice, then it is going to basically put in your 4A 4A, right? So in B2B or B2C transaction is going to automatically put it. Okay. Now further, so you have SEZ, like for example, you are supplying to SEZ or buying from supplying to SEZ, where this is where you require the detail in your GSTR1, right? Then maybe you might be supplying to US embassies and other thing. So how do you configure? Or you are supplying through e-commerce portal. If you are supplying through e-commerce portal, the e-commerce operator is going to deduct TCS, right? And there is a separate column in which you have to capture supply through e-commerce. So how do we do that? So again I'm repeating, master configuration is very important. If you spend, even if you have to spend extra 10 minutes or extra half an hour in configuring the master, please do that. That is going to save your lifetime of your time, energy in the GST compliance. Okay. So when I do this, then again, like this is what I just now explained, right? So if you say regular or consumer, it is going to capture based on that different area. Like, this is where it helps in identifying. If you say regular and composition, it is going to capture in 4A, 4B, 4C, 6B, 6C. Okay. Consumer, again, 6B and 6C, again it depends on what information, further configuration. If you say consumer unregistered, okay, if it is more than 2.5 lakh, it will capture in your table. So Tally will also know if your invoice value to an unregistered dealer, okay, if it is more than whatever is the requirement as per the law, if it is more than 2.5 lakh, you have to capture in 5A, 5B, right? So if it is a consumer or unregistered, if the invoice value is more than 2.5 lakh, it will capture in 5A, 5B. If the consumer unregistered is less than 2.5 lakh, it is going to capture in the table 7. Okay. So this again plays a very important role in configuring your master. Okay. Now the next is, it says that is it a e-commerce operator, right? So this helps in identifying e-commerce operator and report e-commerce operator GST in 4C and 5B of your GSTR1, right? So that is one aspect. Then again, like, I mean, like if it is a deemed export or embassy, UN body, SEZ, if you identify that SEZ, then automatically it is going to put that under your SEZ table. So this helps in a deemed export. If you select the party as a deemed export to this thing, then it will go into your 6C, embassy will go into 4A, SEZ will go into 6B. If it is an export, it will go into your export column also. If the country is not India, then it will consider that as export if you are making using that party account in the sales invoice. Okay. So this is very very critical for you to understand how you're going to configure this master. Very important. Okay. So now quickly I'll show this in Tally. So I'm going to select as regular, and then you are going to enter this GST and set alter GST detail. When you come here again, this is going to open. I've already selected regular, right? So it is also asking other assessment or other territory, no. Then e-commerce, yes. Okay. Consider party as deemed export for purchase. If it is applicable, you mark this as yes, right? And then party type we just now saw. Okay. And then this is your transporter. If you enable e-way bill, then it is asking you the UIN. It will also ask one option saying whether this person is a transporter, right? So if you say transporter, then for your e-way bill, it is automatically going to consider as the transporter. Okay. So this is how very important for you to configure the master for GST, especially the party master, your supplier and your customer. Currently customer is very important. That is where you're going to give the breakup, right? So supplier also, it is good practice to have all this information properly. Okay. Then comes your expenses ledger, right? So now here is where it is very very important. Again, I'm going back to that the hierarchy and this thing, where uh, the moment you set up at the company level, every ledger will automatically get impacted. Okay. Very important secret that you have to remember here is that whenever you are creating so the moment you enable GST for the company, internally Tally will enable GST for your purchase group, and all the ledger under purchase, GST will become automatically applicable. All the ledger under your sale, all the ledger under your direct income, indirect income, all the ledger under your indirect expenses and direct expenses. Okay. So the secret that you have to remember is that if there is any expenditure where you are accounting for, and if the GST that is levied, if you are eligible to claim input tax credit, even if you are not eligible to claim input tax credit, and then if you want to reverse it, you want to account it and then reverse it. Okay. So basically you have to remember that any voucher, whether it is your expenditure voucher or whether it is your purchase voucher, the value of GST, if you want that value to be reflected in your GSTR form, you have to make sure that, what is that you have to make sure? You have to make sure that GST applicable is yes. Okay. And by default, this is going to be applicable based on the group that you are going to select. Okay. Now, set alter GST detail, when will you do? You will do the set alter GST detail only if this particular ledger does not have the master configuration, or does not have the rate that you have configured at the company level or at the accounting group level. I hope you people are with me, you are following, because this is very important. Okay. For example, we had created 18% at the company level, right? So now I'm going to create one ledger called repair and maintenance, and let us assume. So I gave this example earlier. So let us assume that my repair and maintenance, all the, either it is repair and maintenance service or repair and maintenance item that I'm going to buy, it is going to be 18%, right? Now you don't have to bother to go and again go and put 18%, because 18% is already there in your company level. It will automatically inherit. So this is one thing that you have to remember. And the other important thing that you have to remember is, if the rate is different from the rate that you have configured at the higher level or at its parent level. What is the parent level? Ledger parent is accounting group. Accounting group ka parent as per GST is concerned is your company level. Okay. Inventory, stock item, parent is stock group. If it is a subgroup, the subgroup's parent is the main group, and main group ka parent is the company level. So that is the hierarchy that you have to remember. Okay. So if it is going to be different from whatever rate that you are going to you are specifying there, right? So you will say yes. Assume that it is going to be different. You are going to say yes. So the moment you click here, yes, and this screen again is very important for you to understand. All right. So now I am configuring GST for this particular ledger. Okay. So I'm going to say description HSN. Now we know what to do this, right? So nature of transaction. So now here, see again, internally Tally automatically, depending on the party type, depending on the state, country, type of dealer, okay, internally Tally will automatically capture. This is one of the important secret that we have to remember, how Tally is considering this. Okay. So these are the different nature of transaction it is given. It is giving you every aspect of it, right? So if it is interstate purchase from unregistered dealer, whether it is exempt, nil rate, whether it is service, whether it is taxable. And if you see here, purchase taxable is there for local purchases, interstate purchase taxable is there for your interstate purchase. Okay. Now here again, very important information that I'm giving you here is that if you select not applicable. Okay. Normally, what you do is you will say repair and maintenance, and if it is a local person, you will say purchase taxable local. So once you go and link, see, once you link one to one, then this ledger will always calculate CGST, SGST, because you are saying this is purchase taxable local. Okay. But if I say not applicable, you can select not applicable. Very few of them know this. If you say not applicable here, and then you do all the other configuration. Okay. Then what happens is, if you select this ledger repair and maintenance, if you are buying from a local person who is in the same state, then Tally will internally go and put purchase taxable. It will automatically capture internally. Okay, and you will use the same repair and maintenance ledger where you are buying, now accounting an expense bill which is interstate bill. Okay, so now Tally will automatically take interstate purchase taxable. So to avoid two ledgers, see again, you can create independent ledger for each one of the nature of transaction. You can link the ledger to the nature of transaction so that it will take this. Otherwise, these are some of the advanced configuration which basically helps you to optimize your master structure. Okay, so not applicable, remember, Tally will internally do whether it is local purchase or interstate purchase or whether it is local sale. Anything that I'm going to tell you is going to be applicable for all type of master, whether it is expense side master or whether it is income side master. Even in the sales ledger, if you say, if it is the rate is different, if you just say not applicable, if you select this party, right? So again, depending on what type of the state, it will automatically internally select whether it is local or interstate purchase. Okay, so this is where you basically do this as not applicable. And then here again you can say whether this particular thing is thing. So let us say, mm, you are buying books and periodicals, right? Or some professional books you are buying for your organization. It is GST is going to be applicable, which means basically in your GSTR 3B, you have to say what is the exempted or nil rated inward supply has to be captured, right? So in that case, what you can do, you can create your ledger called books and periodicals or whatever is the ledger appropriate ledger name that you are going to give. And then you are going to now mark this particular ledger as exempted or nil rated, right? So now what is the advantage? The advantage is once you do this, even though there is no GST involved, once you mark this, and automatically every time when you are accounting for that purchase of your professional book or anything, okay, so since you have already configured in the master, that value will automatically go and sit in your GSTR 3B as inward supply of exempted or nil rated item, which you need to declare, will automatically go into it. That is where again I'm coming to master configuration is very very important. Okay, so this is where you can do this thing. So here let us assume that I have not changed the GST rate, which means whatever is the 18% that I have given in my company, that 18% is going to be automatically applicable, right? So I can just now once you come inside here, you have to specify the rate. Okay, so otherwise you don't have to do this thing. Otherwise you can just escape this, and in case if there is no change. So this is what I had just now explained to you, that what is that you are going to capture this. Okay, so yeah, this is one aspect of it. So let me just uh, let me just show this in Tally. So this is about the party account which I mentioned to you, right? So I come to accounts information, ledger alter. I have, I think, repairs and maintenance. Okay, it is not there. So what I'm going to do, I'm going to create a ledger called create. Okay, so first I will show you in this company. If you want to see what is the GST rate that I've provided at my company level, I go to F11, F3 statistics, enter, and then just come here and click here, GST rate detail, right? So if you see here, at the company level, I have specified 18%, which means any new ledger that I'm going to create, right? If it is 18%, then I don't have to worry about GST. Only thing I have to make sure, what should you make sure? Only thing you have to make sure is, I'm going to come to, sorry, accounts info. I'm going to go to ledger. I'm going to say create. Then I'm going to create repairs and maintenance. Okay, and I'm going to say this is my indirect expenses. Enter here and see, automatically you will notice here GST applicable is yes. Okay, now if there are any expenses where there is no GST impact in the invoice that you are going to account for, or any other expenditure where you know that this particular nature of expenditure, there is no GST implication for this particular nature of expenditure. In that case, what are you going to do? Okay, you are going to come here, press space bar, and you will say not applicable. Okay, the moment you say not applicable, using this ledger, okay, even using this ledger, if it is not applicable using this ledger, even if you are using your input credit CGST SGST, it will not reflect in your GSTR return form. Okay, so that is why this is very important. Okay, wherever you want that tax amount to be reflected in the form, make sure that it is applicable. Okay, now I am not going to go and set inside, because let's assume that this repair and maintenance is 18% only. So I don't have to do anything. Only thing, by default it is applicable. Just make sure that it is applicable, and then just press Ctrl A. I'm going to pass this entry and show you how one entry of 18% I can enter, and another repair and maintenance purchase entry which is 28%, how I can change is what I'm going to demonstrate. Okay. Now, I think before we go into the next section, I think we can take a 15-minute tea break. It is almost 1.5 hours.
Yes,
I'm
sir.
sure that it is going to be
Yeah,
tough for you to, concentrate. So what we are going
yeah.
to do is post lunch. So it is 11:26. So 11:45, whatever is the time in your watch.
11:45 should be okay.
Yeah, 16 minutes from now, let's reassemble again, and we will see how do we handle reversals and adjustments in Tally. Okay.
Okay, sir.
Yeah, thank you all.
Thank you.
Yeah, thank you. Yeah, I've started the recording. Okay, so the next section that we are going to see is the reversal and adjustment, and this is again a very important chapter, where all type of adjustments that is required from the GST compliance aspect of it is covered in your reversal and your adjustment. Adjustment is basically, if you receive advance, it is going to show you in the return form saying that this is the value of advance that is received, and this is the value of tax that needs to be discharged on advance. Similarly, in case of reverse RCM, it is going to show you that this is the value of RCM for which the tax amount is going to be this much. But at the same time, you have to now see that the values that is getting reflected in the form should also be part of your books of accounts. Okay, so that is where you will come to the reversal and adjustment section, and see what are the different types of reversal and adjustments that you can do in Tally, is what we will see now. Okay, so if you see here, first let me just come to Tally. So you go to your voucher entry, and in the voucher entry, you have this journal. So you click on the journal entry, and in the journal, this is your normal journal, right? So you have to pass a journal entry, which also needs to have an impact on your values of the entry that you are going to do, which needs to be reflected in the respective table of the form. So for that, again, on the right hand side, if you see, you have this button called Stat Adjustment, right? So when you click on Stat Adjustment, if you have enabled GST and TDS, it is going to show you both. So now you have to tell Tally this adjustment that you are doing, for which nature of compliance you are doing. Okay, so in this company, just GST is enabled. So the type of duty and tax, it is only showing GST, right? And three things are there. One, you select the type of duty or tax. Once you select GST, then GST related adjustment it is going to come. Okay, so the next option that it gives you is what is the nature of adjustment that you want to do. If you see the list of nature of adjustment that it gives you, this is at the top level. So for example, if you want to decrease in tax liability, okay, or if you want to increase input tax credit. So if you want to decrease your tax liability, what are the instances where you would want to decrease your tax liability? One example that I can give you is, if you are importing goods you would have paid IGST while clearing your goods. Along with the custom duty, you pay your IGST, which means already the tax is already paid, which is your input tax credit. Supposing you want to decrease that, you can use this decrease option, right? So I'll show you. Once you select the major nature of adjustment and then you enter here, it is now further going to give you the additional detail, which you can select the specific nature of adjustment that is required for you in this transaction. So one simple example is that the adjustment against credit. What is this adjustment against credit? Okay, now in Tally, from a compliance point of view, you definitely need a tax ledger, which means, basically you need three tax ledgers. Again, I have seen some of you will create a GST ledger saying that GST. I've seen some of you creating GST, output GST at 28, output GST at 18, 12, 5 also. Then you create your input GST at 28, 18, 5. So like this, you have multiple ledger you are creating, right? Now, from a GST compliance point of view, Tally says that you don't have to create multiple GST ledger. You don't have to specify the GST rate, because it says, I know that you have entered already in your company level. So it will automatically inherit and it will automatically pick up the rate from the company level. Okay. Or you have entered your major item that you are dealing 18% at the company level, and you are dealing in some item where you, like I showed you earlier, you have gone and changed the rate of GST, either in the stock item or in the stock group, either in the accounting group or in the accounting ledger. You have already entered the GST rate there. So when Tally says, you just create three simple ledger for you to track your ITC credit ledger. That is four ledger. One, you create your integrated tax. You create your central tax. You create your state tax, and if cess is applicable, you create cess. Okay, and you don't have to mention the rate of GST, because you are going to have one common ledger. For output also, input also, you can have one common ledger from the compliance point of view. But for your internal control, internal reporting, internal management, MIS and various other things, if you want to create, Tally will allow you to create rate wise GST also. Then Tally will also allow you to create output GST separately ledger, input GST separately ledger. All that can be done. Okay. But then now, finally, before you make the payment of your GST liability, if there is any liability occurring for that particular period, then you have to basically, adjust your output minus your input. So that is where you use your adjustment flag called adjustment against credit. So whatever is your input credit is there, you can set off that input credit with your liability GST collected, so that the net, it is going to show you whether the net is going to be payable or whether it is excess ITC carried over. So you will do this thing. Now, if you see this again, I will not explain everything. I hope you will understand this logic once couple of things when I explain. So cancellation of advance payment under reverse charge. So if you have paid advance payment under reverse charge, Tally is going to show you in your GSTR return that advance is paid on reverse charge. And if you have cancelled that advance, where you have got the refund of the advance, that also you need to report it. So that is where this flag is there. Okay. Then if this is your normal cancellation of advance, right? So you have received advance, but you have received advance, but for some reason the order is cancelled and now you are refunding the advance back. So when you're refunding the advance back, then you are going to say cancellation of your advance receipt. Okay. Similarly, for each entity, you have this flag, right? Purchase against advance payment, sales against advance payment, and all these things. So when you are making a sales, right? So you have received advance. On that advance amount, you have already made the GST payment. Now you are invoicing. When you are invoicing, you have to adjust that advance so that that liability gets automatically knocked off in your GSTR 1 return, also in your GSTR 3B return also. So how do you do that? Very important is that you will select this flag and then you will make that adjustment entry. Okay, so this is only in case of decrease of tax liability. These are sub adjustment flag, relevant flag you will select for the nature of adjustment. Now I'm going to press backspace, and now I'm going to say increase in input tax credit. So what are the cases where you are going to increase in your input tax credit, right? So enter here. Now these are the various ways that you can do it. Now again, Tally is not going to tell you that how should you pass an entry, right? So there are multiple ways that you can do it. Like for example, when you are importing of goods, either you can directly go and debit your IGST ledger, tax ledger which you have already configured, IGST ledger, and then it will automatically show the input credit, which you can later on adjust against your liability. Some people, what you would do is that you can go and put it under tax paid on import, GST paid on import, which could be part of your current asset, and then later on, if you want to transfer that as part of your input tax credit, you can do this. So whichever is your accounting practice, okay, Tally does not restrict you and does not direct you to saying that this is how you have to pass. You understand the nature of the flag, understand the impact and implication of the flag, and then pass the entry the way you are comfortable with your accounting transaction. That is why you will see many of the things getting repeated in multiple flag for you to support your style of accounting for your company. So when you're going to increase your input tax credit, in case of import of capital goods, service, ISD transfer, if you are getting ISD transfer, if you want to increase your input tax credit, you can do this. Okay, so purchase from SEZ, so all this is there. Reclaim of reversal. Reclaim of reversal is what? We know that whatever is the input tax credit that I have claimed in the particular month, and if I don't make the payment to my vendor within 180 days, as per law I am supposed to reverse it. Okay, so when I'm going to reverse it, then there is a flag which is going to tell me that I'm going to reverse it. And after that, after reversing, and I'm sure that all of you are aware that I mean, like, when you are reversing, you have to pay interest at the rate of 18% for that input tax credit that you have claimed. Okay, now after 180 days, let us say you make a payment to that particular invoice which you have already reversed your input tax credit. Now you are going to reclaim that input tax credit. Now again, all this flag, if you see, is going to help you. See, this is one advantage of having GST enabled in Tally, so that you can maintain your three important modules of Tally. So the three important modules of Tally is: one is your accounting feature or your accounting module, then your inventory feature, your inventory module, and your compliance. So all three very critical aspect is going to be integrated in Tally. And the best part is that you will never get a notice from the department saying that your return, the value of your outward supply that you have published or furnished in your GSTR 1 is not matching with your GSTR 3B. I'm sure that some of your clients would have received this notice from the department saying that your GSTR 1 turnover is not matching with your GSTR 3B turnover. That is because unfortunately, I mean, like, people are using multiple tool for GST compliance. One accounting, you use Tally; GST, you use Excel or another third party software. Something you keep doing, which means basically your data or your information is in multiple tool. So that is where you will have a problem. The advantage of having GST within Tally is that, one, all your three books of account is going to be integrated. Number one. Number two, that whatever is the report, whatever is the value that is getting reflected, will reflect the same value, will reflect in your all your return. That is your GSTR 1, your GSTR 2, your GSTR 3B, and also your GSTR 9, right? So all these things it is going to automatically integrate. So that is again very important advantage of having GST enabled in Tally. Okay. So this is where it is like your TCS adjustment, your TDS adjustment, everything you are going to see. Like for example, TCS, you are going to increase your input tax credit. Whatever is the TCS that your e-commerce operator is deducted, which basically you can claim as your input tax credit. Use the flag for TDS, for TCS, and all those things. Transitional credit is no more required now, unless if some business is now who's transitioning from composition to a regular dealer based on the upper turnover limit, then you will use this transaction. I mean, you will use this flag for you to take your transitional credit. So that becomes your opening kind of a thing. So all this you can do this. Again, if I come back here, so here I'm going to increase my tax liability. What are the instances where I'm going to increase my tax liability? When you come here, it is going to give you the list here. Okay. So increasing your tax liability, if, like I said, see, if you see here, you are also seeing this import of capital goods, normal goods, services, and all those things. You are going to do it. You can also account for your interest, late fee, penalties, and various other things where you're going to increase your liability. So these are the basic thing. Opening balance, you can do it, you can claim your refund. Then reversal of input tax credit, very important. When you come to reversal of input tax credit, when you select this adjustment type and when you enter here, now these are the various tables where you have to specifically capture the value related to this table based on the rule or the section. Okay. Like for example, um, exempted and non-business supply, where the rule 42.1m, as per rule 42.1m, you are supposed to reverse the exempted and the non-business supply. Exempted is basically your taxable and exempted adjustment that you have to do, right? Again, on import of service, if you are not eligible for that, you can do this. And ineligible credit, wherever the credit is not eligible for you, the negative list which you have already claimed input tax credit, you can do this thing. Again, similarly, IST. So like this, all this depending on the various the rule and section, you select the appropriate flag. By selecting the appropriate flag, Tally is going to take that value of the voucher value, and it is going to put it in the respective box. Okay. So this is basically your adjustment entries that you need to do. Similarly, if there is a reversal of tax liability, you come here, and here there is this 3 reversal of tax liability which is there, which you can do it. So the overall thing, if you see, increase in your tax liability, reduction in your tax liability, increase your input tax credit, reduction in your input tax credit. Okay. So these are some of the things. Like one other thing which I want to show you is increase in input tax credit. Mm, mm. Increase in tax liability. Huh, here. Increase in tax liability and input tax credit. Right. So what is this? This again, you can use this thing. Let me just select here. See, basically in import of service. Under import of service, what happens is that you are not going to pay any tax at there is no custom clearance instance, right? So what you have to do is, you have to, on import of service, based on the conditions of the law, you are going to now account for the liability on reverse charge. Okay. Now, again, as per the reverse charge mechanism, for your eligibility to claim your RCM credit, I'm not getting into the detail of the domain aspect, the statute aspect. If you are eligible to claim your input tax credit in the same month, then you don't have to pass two entry, right? So import of service, you are accounting for your liability of on reverse charge basis, and since you are eligible to claim input tax credit, use one single flag and then do it. So that way, what Tally will do is, it will show your liability in your liability column, and it will also show your input credit in your input column, right? So every transaction that you're going to do will impact your form. That is why I was telling you, the end result that we are going to achieve, click of a button, you are able to file your return. Okay, so these are your various adjustments that is required. So a couple of adjustments I will show you as we move into the other areas of our upcoming modules or sections. Okay, so I hope this is clear. Any question if you have, I think we will take this question here
Yeah, hi sir.
because it is critical.
Hello.
Yeah, please go ahead. I think CA
Yeah,
Kaushik, right?
yes, yes. Nature of adjustment, increasing tax liability and increasing input tax credit.
Hmm.
If we see for if we what we are doing in our clients,
Hmm.
for some of the clients in 3B, it has an effect in output tax and input tax. But for some of the companies, there's only a one effect, which is there's no dual effect.
Hmm.
Even if we see the ledger configuration, all the things both are one and the same. But what might be the problem? Why it is not reflecting in both output tax and input tax in GST 3B?
Huh, again, that's what I'm saying. So I gave you this example of import of service, right? So in the import of service, so what you are going to do is you have to now account for your liability on reverse charge basis,
Yes.
and you are also going to claim your input tax credit, correct?
Yeah, yeah, yeah.
So what you have to do is you will come to journal entry because it is going to be a JV only, because you're not
Yes.
going to make payment to any third party. You're not
Yeah.
paying at your customs also your IGST, correct?
Yeah.
So what I'm going to do, so since you have raised this question, I'll show you how we are going to pass this entry. So I'm
Yeah.
going to select this is GST, and then I'm
Okay.
going to say, okay, let me do this. So I'm going to now say, let us say I made an import of service. There is another in the upcoming session, I will show you how do you account for your import of service and all those things. But still, I'll show you now since you have raised this question.
Yeah. You can consider under purchase under reverse charge.
Purchase under,
Reverse charge.
purchase under reverse charge.
Yeah. Yeah.
So now I have done all those things. So in fact, Tally is going to show you the what is the amount of reverse charge which is there. I'm going to show you that little later. So you say purchase under reverse charge. Okay. Now this is the flag that you have done. Okay. So now let us say, let me just show this on 1st of February so that I can show you the impact in the form also. So what I'm going to do now, this is purchase under reverse charge, correct? So, which means in this case, I am increasing my liability and also increasing my input tax credit, which means literally my, let us say this is IGST. Okay. I'm going to now increase my liability of IGST and also at the same time claim my credit of IGST. So I'm going to debit IGST, right? So whatever is the rate. So now this will come once you know what is the rate and all those things, right? So currently, so I'll just say 18, 1 lakh. I'm doing the second part of the entry. Actually, we should do the first part and then do the second part, but I'm just showing you the second part, right? So 18% on 1 lakh is 18,000 IGST. So what are you going to credit? So credit, so debit IGST means for you it is input credit. So again, you are going to credit IGST since I have created only one common ledger. Okay, I have entered here. Okay, I have now captured here. Now I come to my display. I'll just use this for your benefit. State statutory report. I go to GST. I go to GSTR 3B. Right now, by default, it will always show me my previous month. I press Alt F2, and then I'm going to say February, and see here what has happened. Automatically, it is shown your IGST on the output side, and also it is shown your eligible input tax credit on the input side, right? So Alt F1, right? So it is showing you inward supply liable on reverse charge, table 3.1D, it is already captured, and also in your table 4, inward here, inward supply liable to reverse charge other than 1 and 2, right? So if you say inward supply reverse charge in 1, which is import of goods, if you select that proper flag, it will reflect in 1. If you select the proper flag of import of service, it will show in your 4A2. since we are selected on reverse charge purchase other than import of goods and service, it is automatically captured here, right? So this is where selecting.
Hello, sir.
Hello, I think.
Now, hello, sir, you are there?
No, I think Pugal's this thing has got stuck.
No, the power went earlier, and my Act FiberNet internet went off. Now I'm using another Geo FiberNet. You are able to see me? You are able to hear me?
Yes.
Yeah, we are now able to hear.
Okay, good. Thank God I have my second thing. So now it is helpful now.
Okay. Disaster management. Okay, sir, you can proceed, sir. You are telling about that input tax, yes.
Right. So it is very, very important for you to basically select the right kind of flag. So once you understand, this is why the design principle and the master setup is very critical for you to have a proper GST compliance from Tally.
Sir, is it possible to show the ledger configuration of IGST once?
I'm coming to that.
Yeah.
I'll show you different ways because different people want different ways of doing it. I'm going to show you all that. Okay. One sec, hold on. Okay. So this clear, CA Kaushik, sir?
No, the table 4.
Huh.
Table 4, you were saying something there.
Yeah. So table 4A, because I have selected my flag. What is the flag that I have selected? I selected my flag as increase in input tax credit and increase in my liability also. Okay. Now it is showing my liability also as 18,000 and my input is also 18,000. So it has become now the net impact here is 0. But literally, as per law, you are not supposed to do this. You cannot use your RCM input against your RCM liability, right? So that's why I said I'm not touching on that area. I'm sure that all of you are aware of that. Based on that, see, what I'm trying to tell you here is the important aspect that you have to remember is that how do you diligently use this flag? That is very important. Like initially, like I said, there's a beautiful saying by this Robin Sharma, who's a thought leader. He's a very famous statement he makes. He says, change is hard at this beginning, it is messy in the middle, and it is gorgeous at the end. So to start, you might initially, if you're trying to do this, maybe, like you will be struggling. You might have not selected the right kind of flag. Through trial and error, you will get it. So in the middle, it is going to become messy. So don't give up. That's the most important thing, right? So don't give up because it is going to be gorgeous at the end. Your GST compliance time and the effort is going to be much, much lesser once you are able to guide your client properly, so that instead of filing 2 return in a day, you can file 20 return in a day. It is going to basically add value to you, your staff, and to your client also, right? So this is what is about the adjustment ledger. Now quickly, let me come to the tax ledgers. What are the tax ledgers that I'm going to create? So I come to accounts info. I have already created the ledger. I'm going to show you, right? So I'm going to come to ledger. I'm going to come to alter, and I have created, see, I've just created one simple ledger called IGST. Okay. Now again, there are various things are there. Like for example, if you want your IGST, show the, see, there are configuration in Tally in the invoice where you can also show what is the rate that is levied. Okay, so there is a separate column you can configure. You can have a configure for HSN, everything. So which means literally from Tally, you can generate a tax invoice and it is 100% compliant to the GST requirement. Okay, so you can capture all those information at the bottom of the tax invoice. Also, some of you must have seen that it gives you your GST, the tax wise and HSN or SAC wise extract or breakup also it gives. Okay, so if you want to, so though there is a column which says for this particular item what is the rate of GST that is levied, you will get it. But some of them say, no, 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 I want, when I print my tax invoice, if it is 18%, I want to say IGST at 18%. So all that is your choice. Whatever way you want to do it, you do it. You can say IGST 18% and then you can put 18% here, okay, and all those things. But later on, I'm going to tell you how Tally is going to compute. That's again a very, very important thing. I'll tell you a little later. First, let's try and understand all these things. Okay. So what I'm going to do, you're going to create an IGST ledger. Very, very important. So you put it under duties and taxes. Okay. And type of duty, again, it is going to ask you what is the type of duty. You will say GST. Okay. The moment you select GST, this is very critical. Now Tally is going to ask you, see, Tally will not know what is the name you are creating. I can put my name Pugal and then I can say integrated tax. When I select Pugal for integrated tax, it will calculate tax, right? So the whole important thing that you have to remember is that you have to, mark that ledger with the nature of tax. So when I say IGST, I'm going to say integrated tax, and that's all you have to do. Now you don't have to worry about the percentage, because Tally will pick up either from the company level or pick up from the stock group level or from the stock item level or your accounting group or your accounting ledger level. So you don't need to put 18% here. Now what happens? So I'm sure that there are some, issues some of you would have faced. Your stock item must be 12%. Okay. But whereas you have gone and entered IGST at 18%. You have given 18%. Now you are selecting that particular item and you are selecting the ledger called IGST at 18%. And you would have realized that Tally is not calculating, right? So because of the clash, or it will calculate tax, but then it will not calculate at 12%. It will calculate at 18%. So now I think this is the right time for me to tell you the uh, method in which Tally is going to compute tax. Let me just quickly, I need to just add one this thing, because this is again very, very important and very critical for you people to understand. So if you see the order in which the hierarchy is set, okay, so please bear with me. I'm repeating this, but it is very important for you to understand. So the order in which we are going to do, I told you that you can give it at the company level, okay, then you can do it at the stock group level, okay. So you will have item, and you can also specify a different configuration or a different rate for a particular stock item in a particular group also. So here, when I say 18%, let us say this is, okay, I'll say 28. I'll say 28 and this is 18. So all my master will automatically take 18. Now, since I made 28 here, this item will be 28, 28, 28, okay? And this also 28. Now, since I've gone and changed this to 12%, only this item will have 12%. Okay. So similarly, I can do this thing. So similarly, I told you that you can do it at your accounting group and also your accounting ledger. Okay. So accounting, you have given 18 here. And if you have given 5% here, then all this item will take 5% here. Okay. And I also told you that you can also override this configuration of the rate in the transaction. Okay, that means in the voucher you can go and change it, right? For example, if all this is one is 18%, okay, one is 28%, Okay, and then let us assume that this is also 28%. So one particular item or one particular transaction, the rate is 12%. So I don't want to go and create the master, because once in a while I'm going to get this thing. So I can go and change this in the transaction. Now, the most important secret that you have to remember: how does Tally consider the rate for computing the GST, right? The order in which you set up is uh, top to bottom. Okay, so company to your transaction level. But when Tally is going to take the value for computing GST, it will go bottom up. That means what Tally will do, please listen carefully. If you have any doubt, please raise your hand or you please ask question. So what Tally will do, it will go and see whether there is any change in the rate in the voucher entry. So there is, you have not changed anything in the voucher entry, then it will go, this is the order, then it will go to your accounting ledger. It will go to your accounting ledger and see what is the rate you have entered in the accounting ledger. If you have not entered anything in the accounting ledger, then Tally will go and then it will go and look for the change in your accounting group. Okay, if there is no change in your accounting group, then it will flow back to your stock item and see if there is any change in the stock item. If there is no change in the stock item, it will go back to your stock group and see if there is any change in the stock group. Okay, if there is no change in the stock group, then it will traverse to your company and then you will see what is the rate. So since you have given 18%, Tally will compute your tax at the rate of 18%. Okay, this is how, while computing tax, Tally goes bottom up. While setting up your master, it goes top to bottom. Anything you do at the top will automatically inherit. Okay. So now I'll give you another example. You have gone and changed the rate as 12% in your voucher entry. The moment it sees a different rate in your voucher entry, Tally will apply that rate. Assume that you are not given any change here, but you have gone and changed one, you have changed this ledger for 5%. When you are using this ledger, because there is a rate of 5% in the ledger, Tally is going to automatically take 5% and it will not go further up. Wherever there is a rate specified, it will go to that level and apply that rate for your GST calculation. So it will ignore all the other traversing path. So this is very important. So similarly, in the accounting ledger, whatever you are giving, especially your GST ledger, if you are specifying any rate, whether you are paying 12 or 18, first thing it will do is it will take this. Okay, if it is not in the transaction. So that is why I told you that it is not required for you to specify the rate here, because the rate is there in all your other masters. Okay, so this is one thing. So again, for example, let us say I am I've created CGST. In the CGST, I'm going to select central tax. Now I'm creating one more ledger called SGST, and I'm supposed to select state tax. By mistake, I've selected central tax. Let us assume. Now you're going to make an entry. You're going to make an outward supply. So you're supplying to a person within your state and you are selecting your item, or you are selecting in Tally, you can also raise a tax invoice without item also, which means I'm sure you people are aware that there is something called accounting invoice feature in Tally, where you can raise, as a chartered accountant, as a auditor, as a tax consultant, you can raise a tax invoice on your client, a GST tax invoice for your client in Tally once you enable your GST module, right? So you can raise this invoice. So when I'm raising this invoice, I have created a ledger name called CGST SGST. But what is the mistake that I have done? In both the CGST SGST, I selected central tax. Okay. Now I'm coming to Tally, selecting CGST. Let's say 1 lakh is the fees that you are charging. I'm selecting CGST. Automatically, Tally will calculate 9,000 rupees. Okay. And another important secret that you have to remember: once you configure the masters in Tally, your tax master, everything, automatically, when you make a purchase entry in the invoice mode, when you make your sales entry in the invoice mode, Tally should automatically calculate GST. If Tally is not automatically calculating GST, that means you have done some mistake in your master configuration, 100%. So you have to go back step by step. You have to go back and see in which master what mistake you have done. That is why I have to bring this up for you to understand how the system of Tally's uh, GST methodology works. Okay, setting up is top to bottom, while calculating tax it is bottom to up. Remember the bottom to up; it is very, very important and very critical. So what I'm doing, I have selected CGST. It is put 9,000 rupees. I am selecting SGST. It is blank. It will not calculate. Even though I selected a ledger called SGST, it will not calculate because Tally. This is the intelligence what I was telling you. Because what did you do when you created your SGST ledger? When you created your SGST ledger, instead of selecting state tax, by mistake you have gone and selected cess or central tax. Because in this invoice 50% of CGST state and central is not there, Tally will not calculate the amount of to central. It will not calculate to state. It will not calculate. So these are the intelligence that is built in, which is going to give trust and confidence, especially for you people when you are now enabling GST. So these are the trust quotient which Tally provides to the user, that Tally takes care of the compliance, the basic or the fundamental error you Tally will not allow you to commit. Okay. So like this you will create this 3 ledger. Now some of you will have this question, I'm sure, that you will say that no, because how can I go and put my input tax credit under duties and taxes? As per accounting norms, it is wrong. I want to put them as my current asset. Okay, I want to show my liability as my liability, and I want to show my input credit as my current asset. I don't want to put it under duties and taxes. Now will Tally allow this? Yes, Tally allows this. How do you do this? I will show you. So let me just create. I come to create, and let us say I'm creating input IGST. Okay, enter. Now I don't want to put it under duties and taxes, so I want to put it under current asset. So I'm going to select current asset. Now when I select current asset, it is not asking anything, because it has to ask me now whether it is integrated tax, or whether it is state or this thing. Because if you don't flag it, then that means your GST, you are not enabled your master properly. So now it is not asking. How do you enable this? So this is where your secret number 2 is going to help you. First, see on the right hand side, secret number 1, whether there is any button which allows you to select the nature of GST duty. It is not there. So what you do, you press F12 configuration. Right, in the F12 configuration, there is this option called allow creation of tax ledger under other group. Very important. This is no. You make this as yes, and you press Control A, and now you see here you have a new option where it is asking you, do you want this ledger to behave as duties and taxes ledger? You say yes, I want this ledger to be behaved as duties and tax ledger. Now the same kind of configuration that you got it in your duties and taxes, Tally is going to ask you. You say GST here, and then now you select whether it is integrated or central or state and all those things. This is how, if you want to manage your output as your duties and taxes, your input as your current asset, you can do this. And then you use your stat journal to adjust your credit. Adjust before making the payment in your 3B, you adjust your credit. Just now we saw the flag, so based on that you can do this. Okay, so this is again a very important critical aspect that you have to remember. Okay, so I hope this is clearer, especially the current asset, because if you don't enable in your F12 configuration, you will not get this behavior. If you don't get this behavior, then your GST is going to be wrong. the values that is going to come in your return is going to be wrong, or this input credit is not going to reflect in your GST forms at all. Okay, fine. So this is about the adjustment which we were talking, how you can select the additional adjustment. So very simple, three important aspects you have to remember. Type of duty. If you have enabled GST and TDS, then if it is for GST adjustment, select GST. Once you select GST, then you say nature of adjustment. Once you select the nature of adjustment, under that nature of adjustment, whatever is the additional detail, Tally is going to give you the list of all the required additional details of your adjustment that is needed. You can pick up the relevant adjustment and then you can capture. By doing this, the values is going to get captured properly in your books of account and in your return. Okay. So any questions on this, especially in understanding the hierarchy and also the way Tally computes? It will go from transaction to accounting ledger to accounting group, stock item, stock group, and the company last. Okay, any questions you have? Shall I move forward?